Alphabet, which also just came out with its numbers. And it looks to be sinking because of the cloud revenue, specifically missing estimates. How big of a disappointment is that?
In my opinion, I think shares of Google down 5% on cloud miss while search and YouTube are above expectations is a bit of a exaggeration. Down 2% would be an okay after hours reaction, and I would expect shares to regain some of the lost ground as the night progresses, as the day progresses tomorrow, is what I feel as a first pass. I think they check the boxes on YouTube, they check the boxes on search, margins are better, hiring is slower, cloud is kind of on the margin an expectations game versus Microsoft versus Amazon. They're still growing faster, so I would say this is a lot of positives with a slight yellow flag.
And Rohit, listen, obviously there's been a boom of interest in AI, and Google has putting a lot of time and energy into that technology, and they've got the cash and some of the smartest engineers on the planet. Do you see them, Rohit, as a key beneficiary of AI in the quarters and years ahead?
I think so. As in, if you look at in Silicon Valley, Google is kind of considered as almost like a godfather of AI. They started AI before even OpenAI came about. That's how I would put it. And I think they just lost the mojo with AI earlier this year, and they have started to regain some of it back as they're showing products, direct-to-consumer offerings and they're still in search of that killer AI app, in my opinion, outside of the chat that ChatGPT is showing or showcasing everyone. Regardless, next year I feel they have real catalysts. They have the multimodal model called as Gemini coming up. They have a lot of new products recently launched that haven't yet demonstrated the adoption that they can have. So I feel Google is in the right spot with the right message, with the right set of products and capabilities as far as AI is concerned. I think that and has the best catalysts ahead as compared to even some of the other mega caps as far as AI deliverables are there out there.
Let's talk about the team as well, because as we talked about, Ruth Porat is transitioning into a new role at the company, but she still has the CFO role until they find a new person. How urgent do you think then is the need to find that person?
I think the biggest signaling that Google can do with regards to the new cost structure that everyone that they have promised investors over the last 12 months, that they are going to transition into a cost structure that is going to show leverage quarter on quarter. We haven't yet seen that. To some extent, Amazon and Facebook have tried to demonstrate that cost structure, but Google is yet kind of lagging. And I think this transition around what Ruth Porat is trying to achieve is probably going to be a catalyst for come next year. If you're talking about upside to Google shares, maybe we are going to find a couple of surprises on margins that, hey, Google can actually deliver leverage at the scale that they should have given. And now, with the transition away from Ruth, we are going to start to see that. So that's the signaling a new CFO could start to do in first half of next year. And the sooner they get somebody in that seat, the sooner that can happen.
And Rohit, when you look at Google's results here, is there a read-through for you, Rohit, to what we're going to hear from Meta tomorrow when they're scheduled to report?
I think what I see from advertising upside, even not just from Alphabet, but also from a smaller company like Snapchat, they are showing kind of upside to revenues above and beyond what Street was modeling as far as advertising dollars are concerned. So what we are seeing from both Alphabet and Snap today bodes very positively for Meta and the rest of the ad ecosystem in the next couple of weeks.
There's something else that Alphabet and Meta currently have in common, and that's regulatory scrutiny. We just heard about a new raft of lawsuits from attorneys general around the United States today. Of course, Alphabet/Google's under Department of Justice scrutiny. This is something that these companies have largely been able to shrug off from a stock perspective. Do investors need to be worried about these issues at all?
In my opinion, so each issue is a different issue and has different range of outcomes, in my opinion, and different range of ways to mitigate those outcomes or handicap the outcomes from an investor's perspective. Having said that, the most imminent one that is going on right now in the courts is kind of we are entering the second month of the monopoly trial versus Google. I think so far, if you look at what the stock trend has been, I think investors have decided to skirt away one of the biggest antitrust trials of our generation. So fast forward that 6 months, probably we are not going to see significant handicapping right now. But again, probably that stays kind of as a dark cloud in a distant future if there is some compliance or extra slap on the wrist that these companies would need to have. But right now, next 3 to 6 months, I think it's absolutely clear sailing from a regulatory standpoint, in my opinion.
Okay. Rohit Kulkarni, Managing Director and Senior Analyst at Roth Capital Partners. Thank you so much, Rohit.
Thank you.